Hey everyone, welcome back to another episode of the Meet Kevin Show. In today's interview, we are going to be confronting the founder of the Hex coin, Richard Hart. I'm super excited to bring him on. I want to hear everything that Richard's got to share. He says he will talk to me and answer any questions I've got until I fall asleep. So I brought a monster and I brought a coffee, brought to you by StreamYard. So shout out to StreamYard, link in the description down below. All right, folks. Welcome aboard, Richard. How you doing?
I'm doing good. I'm doing very good.
Awesome. So I want to know, Hexcoin has a lot of, it gets a lot of attention. It gets a lot of both positive attention and negative attention. I want to make it clear up front. I'm not paid for this interview. I'm not an investor in Hex or Pulse or Pulsex. And I want to understand from you, why do you think Hexcoin has maybe the mixed reputation that some folks say it has? And then how would you characterize it?
Well, for the same reason that Bitcoin did. I was in Bitcoin since 2011. I used to mine it on my own computer. I would just double click an exe file on my computer and my fans would spin up real hard. And a few times a day, 50 Bitcoin would come into my wallet. That's $250,000. So
in today's dollars, yeah.
I think it's more actually. So 50 times 50K is
there we go.
Yeah, 2.5 million. It was off by a factor of 10. So, but the trick here is that back when I was doing that, they were only 50 cents each. So now I'm bragging about getting 2.5 million every few hours. But back then you're getting 25 bucks. So you're really bragging about having 25 bucks and having held for a long time. So in Bitcoin, when I first saw it, I thought it was a scam. Oh, you guys are going to just print money out of thin air. That's not going to work. And then I saw it on Reddit when it was somebody sold their house for $1 for it. I was like, all right, that guy probably just lost his house. So then I saw the Wired News article where they were using it on the dark net. And I was like, oh, there's a market. It's working. So I got in and I got in at the top with everybody else. I helped make the top at $30. And then it went down to $2. That's like a 95% loss. Everyone said it was a scam. I thought it was a scam. But now we find out it's the highest performing asset that's ever existed in the history of mankind. It went from a penny to $69,000, a return of 6.9 million fold, 690 million%. And people are pretending like that didn't happen. That was a long time ago. That Bitcoin has had a price since 2010. It's 2022 now. That's 12 years. So
now, you're making the analogy essentially that Hex is maybe, it seems like, an earlier form of Bitcoin. That, hey, look, you can still get Hex now, 28 cents or whatever, right?
Yep.
Now, one of the things you mentioned is that with Bitcoin, we don't print money out of thin air because we're mining it, deflationary currency, limited supply.
Oh, no. It's not. No, none of what you said is true. That's all entirely false. Bitcoin is not deflationary at all. It is inflationary. Miners sell Bitcoin. They harm the price. They buy electricity and mining hardware. So Bitcoin's all about decentralization. But in fact, there's only 5 or 6 mining pools that do all of the mining. And there's only 3 or 4 companies that make all of the mining hardware. And those are the people that make all of the money from the mining, because the economic theory that the cost or resources allocated to extract a resource will trend towards and approach asymptotically the value of the resource. And so as the Bitcoin price ratchets up, the wasting and destroying of the environment with electricity, which you could say Bitcoin's 80% renewable. Fine. I used to be a Bitcoin miner. I know exactly how much I paid for my electricity, and I know exactly how much pollution it generated. It wasn't clean energy. So, and then the idea that a decreasing inflation rate is somehow deflation is hilarious. You're getting a less inflation over time, but the value dollar cost of that inflation is higher and higher because the price keeps ratcheting up because they keep on-ramping new users. So people you get this backwards. You described a cost and a negative externality, which is bad for everybody, bad for the environment, bad for the price, but you think that it's actually a benefit. And so you got to know the difference between a feature, a benefit, and a cost. And Bitcoin mining is a cost that's bad for everybody, and you don't need it anymore. There's tons of proof of stake networks for years, and they've all been less attacked and more secure than proof of work networks.
And that's one of the big arguments that Bitcoin maximalists will have, is that Bitcoin is much more secure. And that
It's
is why
not.
we have proof of work. Though in the future, once we've mined all
It's less
coins,
secure.
we expect to transition. What I'm curious, though, for the difference in Hex is that Hex is a proof of stake coin. And we do have a set inflation rate. I believe it's 3.69%. Can you tell me why have any inflation at all then, if you're opposed to the mining style inflation in Bitcoin? Because you're essentially saying, hey, the cost of the shovels are going up, so it's becoming more expensive to actually operate the network rather than less expensive, which creates more waste. That's your argument. Why have any inflation then in the Hex coin?
I think we've hit the uncanny valley. So it's like Dunning-Kruger for smart people. Cryptocurrency and trading are two things that have very high skill caps, and then like 130 IQ guys figure that they're good at everything else, so they'll be good at this. But in reality, they're just good enough to be dangerous. So let me clarify some things. First of all, Hex is not proof of stake. It is a hybrid proof of stake, proof of work. We use proof of work on the Ethereum network for transactions, and we use proof of stake just for inflation. Because of that, it's more secure than Bitcoin. Bitcoin's had 2 inflation bugs where anyone could mint as many free coins as they want. One of them was executed on the network in 2010, and they had to roll the chain back because someone minted 184 billion extra free Bitcoin. The same bug, created in a different way, reappeared 2 years ago and was discovered, instead of being exploited, by a Bitcoin Cash developer and responsibly disclosed to the Bitcoin core development team. He could have minted as many free Bitcoin as he wanted as well. And why do we keep getting inflation bugs in Bitcoin? Because it is spaghetti code that is not modular, that has no security audits, that has no written spec. And the wallet code touches the consensus code, touches the networking code. So when you try and improve the network, oopsie, you introduce an inflation bug. It's the most common and vile bug in all of cryptocurrency. XLM has had an inflation bug. Hacker dumped it on the market. Ravencoin had a 10% inflation bug. Hacker dumped it on the market. Bytecoin, Monero, inflation bugs. AVAX, inflation bug. Bitcoin, inflation bugs. You know how you solve inflation bugs? You lock your consensus code in a contract that can never be edited or changed, which is what Hex has done, so that you can improve the network all you want and you don't accidentally introduce an inflation bug. Bitcoin.org was hacked 2 months ago.
Hex.com I appreciate the examples. Just a question for you while we're on this. So I know that Hex is built on Ethereum, ERC20, yes. So it's a layer 2 solution. Are you essentially suggesting that really. A layer 2 solution is hybrid because it inherits the proof of work of Ethereum? or could you clarify that maybe for the viewers?
Sure. You can only mint inflation if you had staked. And so inflation's proof of stake. But you can only also mint that inflation if you submit the transaction to the network, which requires proof of work. Now, all that will matter a lot less because I've already forked to the Ethereum network and it uses proof of stake. And you can go use the test net right now. And you can see all of your coins that you had on the Ethereum network for free, the world's largest airdrop, by changing one setting in your MetaMask. And then your keys, you don't have to sign up. You don't have to do anything. Your keys already work on my network. And the snapshot was from 2 months ago for testnet. It removes all of that energy waste. It removes all of those negative externalities. It has higher throughput, lower fees. It's amazing, right? So I'm telling you how it works now, but in 2 months, that won't even matter as much. See, like it's unmutable. We can't change it. The only thing we can do is give people free coins in another network. And then new users that on-ramp can choose whether to pay $100 to do a Uniswap swap and $20 to send an ERC20, or they could pay a penny on our network. And I think the penny is a better deal.
So to be clear, the proof of work you're talking about is the proof of work of the actual Ethereum transaction,
currently, yes.
Not anything to do. Okay, all right.
Exactly.
So now you've also described it, at least when you go to your website, you've described the Hex coin as a top cryptocurrency certificate of deposit, potentially even the first and maybe even only. Technically, a certificate deposit is a savings account that's FDIC insured. Do you think that some people might be confused by this?
Well, it depends on where you live. So the term certificate of deposit is only popular in the United States. Every other country uses a different term. In Europe and Asia, they're called bonds. In Canada, they're called guaranteed investment certificates. And when you put your coat at a coat check, you get a receipt, which is a certificate of deposit. You deposited your coat at the coat check. And so cryptocurrencies attempt to do useful things online in decentralized, trustless, 100% uptime ways. And we make analog. So Bitcoin tried to be a peer-to-peer digital currency. failed entirely. And then it tried to be programmable money, failed entirely. However, it did digital gold really well and went up 6.5 million fold in price, which is a bigger market share and a bigger use case. So congrats to all of us. So even though Bitcoin failed entirely to be a currency, people still call it a currency. It's called a cryptocurrency, and it's even taxed as such. And thus, when we try and make something that approximates a certificate of deposit, in reality, there's very little similar at all. Certificates of deposit at your bank have very low volatility. The hex price has went up 1,000,000% in 623 days and dropped 75% like 6 times. So it's extremely volatile. There's really no similarity other than we monetize the time value of money copying their parameters. So they give you 20% more interest every extra year you lock, and we just copied that parameter and put it on the blockchain.
So a different definition of certificate of deposit. That's what I understand. Now, on this locking, my understanding is for people to earn their currently advertised about 40% yield, they have to stake. And these stakes come with lockup periods, which I believe you need to, maybe you can clarify this, unstake or unlock at a specific time. If you unlock too early, you lose half. If you unlock too late, you lose half. Could you explain this a little bit? What does somebody have to follow exactly to get their 40%?
You don't have to do any of that. The vast majority of your USD ROI comes from the appreciation of the coin. The extra 40% year average, 38% currently, it's just icing on the cake. So instead of making 1,000,000% returns, having bought on January 5th of last year and sold 3 months ago, you could have made 2,000,000% returns, but you'd have an end stake period sometime in the future. So you don't have to end stake at all. You don't have to do any of that. The vast majority of your gains
let's say I
just come from
wanted
holding
to,
the coin.
because let's call like I'm a real estate guy. In real estate, people tell me appreciation is speculative. I want to know about the cash flow. What do I got to do to get that 40%?
You can lock up between a day and 15 years, which is 5,555 days roughly. And you choose your term. If you choose shorter terms, then you're going to pay more to gas fees. If you choose longer terms, you get 20% more shares every extra year you lock, up to that 15-year maximum. The issue is, if you, at a bank, withdraw your money early, you're penalized. In this system, if you withdraw your money, you're penalized. Where does your money go? Well, it rewards the people that did what they said they're going to do. I call it the truth engine. And so we have one of the most compelling things in this currency is it monetizes the time value of money. It monetizes delayed gratification, which is the only long-term thing that works in investing or personal development. It has less negative externalities. I think I already mentioned that one. And it has a chart of future market supply. You don't know when Satoshi can dump on your head. You don't know when Mt. Gox can dump their 140,000 Bitcoin on your head. But in Hex, you know when people can dump on your head because they have a chart of releasing end stakes. And then when you create a stake, you can hit your end stake on a notch where no one else is end staking, reducing the volatility because there could be less sale pressure at that point. It's a very innovative feature. Furthermore, I think it's Nobel Prize worthy in that there is no financial instrument I'm aware of in the entire world that has caused people to lock up their funds for 8 years on average, period. If you get a house, you can sell it. If you get a T-bill, you can sell it. If you get a bond, you can sell it. If you lock up your Hex for 15 years, you can't get out your principal for 7.5. If you remove it before then, you'll get hit in your principal. If you go serve half, you'll just lose your interest, but you'll get principal back. It's very fair. Your penalty is directly proportionate to how much you lied about how long you would stake. And then if you don't end your stake on time, you have a 2-week grace period. Anyone in the world can call the good accounting function to stop you from being penalized if you're hospitalized or if you're in jail, or if you might want to defer income and not have a taxable event. Look, not an accountant, not a lawyer. Get your own financial advice. But if you don't mint your coins, you don't take dominion and control of them, they just are sitting there locked, and you run good accounting, you might be able to avoid a taxable event if you wanted to. But if no one runs good accounting and you don't end your stake and it's been 2 weeks, then you start burning at 1% per week until there's nothing left after 100 weeks.
So a couple questions out of this. Isn't it possible that you could dump shares like Satoshi?
Yeah, anybody. Look, the reason the Hex price has dumped 75% 6 times is because it's very easy for anyone to nuke the price. And it's also very easy for anyone to cause the price to go up, because what is the trading volume and order book thickness for a Monet painting? Nothing. But their value skyrockets. Why? Because value is supply and demand. So if you want the world's highest performing asset, you must remove liquidity on the ask side, or you'll never get that type of appreciation. The reason that Bitcoin has done so pitifully, by the way, I called the top on the day, and that top call was good for 8.5 months now, and only out of profit one single day by about 6%, even less than 6% actually. And I do that for free. I give away that knowledge for free. I did the same thing last cycle. I think it was, yeah. I think that.
Yeah, that's funny. I had a call in January as well, April 12th. That's funny. It was a CPI day. But aside from
Coinbase
that,
launch, easy buy the rumor, sell the news event, amongst other things.
There you go. So this is interesting because, see, according to which I think y'all, and maybe you could speak to this a little bit too. According to Coin Market Cap, you've got a $50 billion market cap, which I think you have a different definition. But Solana has about a $55 billion market cap. The 24-hour volume on your coin Hex is $29 million.
Yep.
The 24-hour volume on Solana is 100 times that at 2.8 billion.
Yep.
Are you suggesting that this lack of daily trading volume is actually good for appreciation?
Oh, yeah. Volume is how you measure how much the users are being victimized. See, you, as a speculator, you don't make money on volume. You lose money on volume. Volume enriches two parties: exchanges that want to see you causing volume to get hit with fees, and market makers that want to see you causing volume to pay bid-ask spreads and fees.
But hold on that.
Speculators don't make money on volume.
My understanding, and maybe, and this is where I just want you to fill in for the audience, is that if I have higher volume, I have tighter spreads because the order book is larger. If I want to sell a Hex and there's a lack of volume, then how can I actually get Hex out? What you're suggesting is, hey, if you want to take it out, you get punished essentially, so you're incentivized to keep it in. Is that kind of the reverse psychology you're suggesting?
Well, no, people just conflate all these things. So they conflate mistakenly that volume is related to order book thickness. Order book thickness is how good order execution you get. It's how much slippage you have to pay. And so if you go to matcha.xyz or 1inch.io and you say, I want to sell $1 million of Hex right now, let's go do that real quick. 1inch.io.
Okay, so I've never heard of this exchange. What is that?
Oh, sure. So the majority of liquidity for Ethereum, the largest, thickest order books in the world, are online, on chain. They're no longer in centralized exchanges, which is beautiful because this means that you can see who's buying, who's selling, what else they own, when they might have stakes ending, what they usually do when their stakes end. It's beautiful and open and transparent, the most transparent trading in the world. When you go on a centralized exchange, you don't know who you're bidding against. You don't know if it's the exchange or in-house market making team. You don't know whether they're spoofed bids that'll get pulled to see you trying to get order execution. It's trash. Centralized exchanges are garbage. They make you beg for your own money. They get hacked all the time. Billions of dollars have been lost to centralized exchanges. So the majority of Hex trading is online, which is, by the way, why the volume number is so low. Because when these other coins list on centralized exchanges, you know what they do? They get fee-free trading accounts. And you know what they do with their fee-free trading accounts? They put tons of bids and asks in between the spread, and they do tons of volume, but the price never actually moves. It's disgusting.
Yeah, I sense your frustration with the market makers. I'm not sure I agree with order book. With volume being.
Well, no, I'm going to give you the math right now.
I'm
going to give you the math right now.
But
if you want to sell $1 million of Hex right now,
1inch, right? 1inch.io is your example, right?
Well, this is just an order aggregator. So there's liquidity pools and Uniswap and SushiSwap. They're at about a 60 and 30% ratio, maybe another 10% in Bancor and Balancer. And what you do is you spread your order automatically using these aggregators like Matcha.xyz or 1inch.io, which I have nothing to do with. And it spreads your order across all the liquidity to get you a better price. Because otherwise, you're going to push up the price on one order book. Then an ARB bot is going to come and sell down your high price, buy up the low price. You're just making ARB bots rich. So aggregators stop ARB bots from getting rich, and they give you more money because it makes you the ARB bot. So right now, if you were to sell $1.5 million of Hex, you'd get 3% slippage. If you were to sell $1 million of Hex, you'd get 2.65% slippage. Do you need to sell more than $1 million of Hex in a single market order instead of using a limit order and being the liquidity yourself and earning that fee yourself?
Well, I mean,
I don't think you do.
I mean, I'm looking at your daily volume. I mean, this is almost similar to just saying 1 divided by, the 24 or 29, whatever daily volume. You're about that 3% of the volume. The concern so much isn't.
Go look up the volume on Apple.
Person.
Go look up Apple's volume compared to their market cap. Our volume to market cap ratio is very reasonable.
Okay, we can compare that. I guess my question is, if We
Oh, by the way,
get
how
an
much
event.
volume should you get on a coin that people on average lock up for 6 years? How are they going to trade it when they lock it up for 6 years, dude? Like, hey, what happens with something that people only buy and they lock up for 6 years? Oh, and has better security than Bitcoin. And by the way, you can look at the price charts. If you go to look into hex.com, you can see the price chart from when Ethereum launched, when Bitcoin launched, and when Hex launched. And Hex is just doing the same things they did at a higher inclination. This is not
How many
unprecedented.
people are staking? Like what
400,000.
percentage of your wallets are staking?
I think only 9.5%.
Okay, so
which is
if
why the ROI is
9.5% are
40%.
staking, that means 9.5-ish percent is locked up. So if 90% decided today I wanted to sell some and our volume quadrupled,
price would go to
but
zero.
we didn't have a large order book,
Yeah, the price would go
what
to
happen
zero.
then?
As a matter of fact, I think you could drive the price close to zero if 4 or 5 wheels wanted to do it.
Isn't that a concern?
Yeah, it is a concern. You know what else it's a concern in? Bitcoin, which drops 85% every 3 or 4 years. Ethereum, which dropped 95%, which Hex never did. And Bitcoin, which dropped 65% in 14 days for COVID. It's a concern for all cryptocurrencies. I'm the only person in crypto that tells you that all of these things drop 85 to 95% sometimes. Hex just dropped 80% a few weeks ago. Now it's up 250% in the last 14 days. You want the highest performing asset in the world? Volatility is the price you'll pay.
Okay.
1,000,000% in 2 years? You're going to have to pay a volatility price for that.
It's an interesting argument. We'll maybe circle back to it.
Ready? So, watch this. You could have bought Hex January 5th of last year, sold it on a double, 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 or sold it on a double again. And then just be sitting risk-free with all of your extra profit. Like,
that sounds like a CNBC article. If only you would have invested $1,000.
Well, but they're all true. Like, people say there's no free money. It's a complete and total lie. Let me tell you all the free money that's in crypto. I got Bitcoin for free by double-clicking an EXE 10 years ago. People that were in Bitcoin got Hex for free 2 years ago. People that were in Bitcoin got Bitcoin Cash for free, XLM for free, Byteball for free, and XRP for free. Oh, and by the way, Hex users got 1inch for free. Uniswap for free. People that used Gitcoin got GTC for free. There's free coins coming out the ears. If you used that NFT platform, I can't remember what it's called, the most popular NFT platform, they just had a free airdrop for those guys on Solana. There's free money coming out your ears in this thing. But if you use the old logic that if it's too good to be true, it's not, you will lose millions of dollars of opportunity. This is the one industry in the world where the old logic, it doesn't work. Now, look, it's full of scams. There's tons and tons of scams, tons and tons of rug pulls. Things go to zero all the time. Bitcoin.org was hacked just a month or two ago. And I had to do a live stream because Satoshi doesn't have the balls to do one where he's dead. So I have to save Bitcoin's users from Bitcoin.org, the core website. I'm the only one telling the truth in this whole industry. But then when I do interviews, people come at me hard like I'm scamming. I've been retired for 20 years. I write self-help books. I do self-help videos. Go look at the oldest books on my YouTube channel. I'm the Giving Tree. I call the top on the day for free. No paid group. I'm the best person in cryptocurrency, period, by far. I've raised the most money for charity, 27 million.
So far, you're being very transparent with the risks. I ask you questions and you're transparently answering them. So thank you.
My pleasure.
Now, and of course, it's up to the users themselves to make up their own decision as to whether they want to invest or not. Let's talk. I want to just briefly go back to this comment you made because I thought it was very interesting. I wrote it down. You said you have this Nobel Prize worthy system of essentially being able to get people to lock up their money for 8 years where they can't take out their principal for 7.5 without getting penalized. Is this attractive to people?
Yeah, very, extremely. You see, people, I'll tell you the secret to cryptocurrency, okay? Because I'm the most honest person in this industry. The only thing that drives prices up is buying and holding. And getting you to buy and hold are narrative memes. And it depends on what memes you fall for. You like pretty JPEG pictures and you want to buy a serial number loosely related to a JPEG, which may or may not still be hosted on the internet. Millions of people are falling for that one. The price goes up. Okay. Maybe you fall for the throughput meme. We need more empty chains. Okay. Maybe you fall for BSC or ETC. Or, hey, my new Pulsechain has got 4 to 10 times the throughput. Maybe you fall for that one. But in the end, you falling for a narrative meme that never came true anyway, like programmable money, you can't program Bitcoin to wake up in the morning. You can't program it to do anything. It's a joke. Like peer-to-peer digital cash, Nobody's using it for digital cash. You got to wait sometimes 3 hours to get a single confirmation. Get out of here. It's a joke. But all that matters, oh, by the way, you can't use it anywhere either. You can use it less places now than you could in 2017. But none of that matters. None of those narrative memes that everyone thinks is so important matters at all. The only thing that actually matters is buying and holding. And guess what? There's only two people that get rich in crypto: the people that buy and hold and the founders of exchanges, founders of currencies. People that buy and hold. Traders get wrecked. They get annihilated. They provide extra yield for the people that don't get wrecked. And so why don't just be honest about it and monetize it and pay people to do the only thing that works anyway, which says, you know what? They're going to inflate Bitcoin to pay miners to destroy the environment. Why don't we inflate Hex to pay speculators to hold the price up? And then we defend the network's price like Bitcoin miners defend the hash rate. And you have less negative externalities. People don't get wrecked by fees, providing volume to exchanges to make exchanges rich. By the way, isn't it a little disgusting that the Coinbase founder made more money than founder of Bitcoin did? The Coinbase founder made more than Satoshi did. And that's the opposite of decentralization. It's not good.
I don't imagine you're very bullish on the Bitcoin Lightning Network, but so I'm not going to ask you about that.
It's garbage.
I'm going to ask you about Ethereum 2.0. What is that going to do to Hex?
Well, it's a really good question. Is it even going to happen? It might not ever happen. And it's very poorly designed, and it's likely to have bugs. And it's been delayed and delayed and delayed and delayed and delayed, which is the nature of software, but it's a little bit unreasonably delayed. So let me tell you some of the poor design in Ethereum 2.0, which may never happen. And we're beating to market with our own features. Moving to proof of stake, awesome. Removes the destruction environment, removes negative externalities, but they did it wrong. Oh, and it helps the price because miners aren't selling it down all the time to buy electricity and enrich weird mining hardware companies in the middle of nowhere. So that's all good. The problem is that they introduced centralization, and it's already cost people $100 million. So to become an Ethereum validator, you have to have 32 Ethereum. Okay, well, that's 150 grand. You got 150 grand? Oh, by the way, guess what you're buying? A job. You have to have 150 grand of Ethereum and run a server that never has downtime, or you get penalized. So you have to have always uptime. If a cosmic ray bit flips your memory, you lose money. So you got to move your servers underwater or under. Anyway, so the point is, what do people do? They don't want that job, and they don't have 32 ETH, so they give their keys to somebody else. And guess what happens when you give your keys to somebody else? They steal your money, or they get hacked, and your money's lost. So a company out of Israel called Fireblocks was taking people's Ethereum and putting it into the Ethereum 2.0 staking contract that will give you yield. And guess at some point in the future, and guess what? They lost everybody's keys. So what did we do in Pulsechain, pulsechain.com? We said, you don't have to have 32 Ethereum to be a staker and to be a validator. You can just delegate your votes to another validator, and you'll make a cut of the fees. And that's it. And so now everyone holds their own keys, and it's decentralized. And if this guy goes offline, you don't lose your entire stack. You know, it's just a better design. Furthermore, we've got battle-tested software that already works, and people have lost hundreds of millions of dollars to find the bugs and fix them. When Ethereum 2.0 launches, I bet you there's going to be some bugs that people got lose a lot of money to find. And so we're beating them to the market with their own feature set, which is primarily higher throughput and proof of stake to get more price movement upwards and less burning of the environment. And, you know, our test node already works, and you can go see your coins on it right now. And our mainnet should be in about 2 months. So some of the things they want to do are great, but they just didn't go about it the right way.
Okay. For NFTs, which you mentioned folks need to hodl for hope. I hate
those things so much.
So
I absolutely hate them.
How do you relate then to PulseX? Isn't that built on your network Pulsechain?
So basically a good analogy is that Pulsechain is a fork of Ethereum. Mm-hmm. That, oh, by the way, it's only deflationary. It burns 25% of the fees, and it doesn't have to mint new coins to pay miners. Even in Ethereum 2.0, they still inflate to pay the rewards. So we still have better tokenomics, even if Ethereum 2.0 was going to launch tomorrow. Okay. PulseX, so Pulsechain is similar to Ethereum, very similar, like, you know, almost bit for bit copy with a proof of work rotation and improved game theory in the tokenomics. PulseX is similar to Uniswap. It's an on-chain exchange that also burns fees. And it's unique in that because we're inflating 1 million times the supply of ETH when we fork it and just giving those to the people that sacrifice to support free speech. In PulseX, people can sacrifice to support freedom of movement and assembly, some rights people forgot that we had. And then you airdrop all those people that sacrificed the free Pulsex tokens. And so those guys are going to get, because the supply of Pulse is a million X higher, it misprices all of the ERC20s, which are now called PRC20s in the Pulse chain. They're all mispriced because their market cap of the Pulse is inflated a million X. So you have to drive up the prices on the automated exchanges a million X. In order to do that, you have to add 1,000 times more coins on one side and remove 1,000 times on the other side. 1,000 times 1,000 compounds to a million X. And so now the AMM price fixer bot has a ton of PRC20s. It puts those in liquidity on the Pulsex pairs, and now you've got the most liquid fee burning exchange on that whole network. And then you mint an extra coin to provide incentive for people to bridge in their ERC20s to back the value of the PRC20s and earn that inflating token as a reward, which helps us reduce the Ethereum fees by reducing their load by removing their users.
Essentially, you're like you said, a million Xing and then deflating from there. But in this,
that's the hardest concept that we've talked about, and I'm amazed that you actually got that. Like that is the hard, like that is a really hard one to explain. And congrats on getting that, because I probably didn't do a good job explaining it.
No worries. But I want to ask you, and thank you. But Pulsex is also going to have NFTs, and you don't like NFTs. Can you
right,
talk
yeah.
about that?
Oh, it's going to look, man. Every new chain that launches is filled with scams, and we already see people using the Pulse name to create their own scams on BSC. Pulse Moon, Pulse Shib, Pulse Doge, Pulse whatever. Like, people are so excited about Pulse that if you stick the word in anything, people are buying it. So, and I hate that. I like, just because I'm launching Consensus Network doesn't mean I like all of the garbage that people are using it for. So, when's the last time you saw it? Go ahead.
Is this yours? The what is it?
Pulsex.com. Yeah, it's just
Pulsex.
a fork of Uniswap. No, somebody else's, and I don't like it at all.
So this is somebody else's.
Yeah, I don't like it at all. Listen to me. They're going to have a 10% fee to get in and a 10% fee to get out. So if you even ever buy the coin ever, you've already lost 20% on paper. That disgusts me. Cryptocurrencies are supposed to be efficient, which means reduced fees. How could losing 10% of your stack to get in and 10% to get out make any sense? It's an obvious Ponzi scheme. And then it says that they're by hand manually going to hand a third of their money to SpaceX at some point in the future, a for-profit company that may not even accept their money. Doesn't make any sense. It appears wildly to be a scam to me.
Because I was going to ask you about that.
No, it
but
seems
that's
like
not
100%
affiliated with
scam,
you
brother.
At all.
No, like if you wanted to see something that looks like a scam, that looks like a scam. It's unfortunate we have a similar name.
This is actually your website, which basically is just a placeholder.
Yeah.
Okay.
Right. So if you want to learn kind of that should become a non-placeholder within the next 24 to 30 hours.
Well, that's soon. Why?
Well, a lot of people, for whatever reason, really want to sacrifice before the end of the year. I'm not a tax advisor, but maybe they prefer to have less crypto at the end of the year. So getting the sacrifice phase up and running before the end of the year is extremely important, and it will be. It will be. So
okay. So explain that. Sacrifice is essentially
you lose your coins,
sending your money and you lose it.
Yep, it's gone, and then you get.
And then maybe you get it back in the future.
No, you get something for free, and maybe that free thing becomes valuable. Now let me tell you why that's important. If you get an airdrop, you owe money of tax. If you take dominion and control of an airdrop, you owe tax money. And so airdropping you something that's valueless is really good for your tax. Not an accountant, but go Google it. Yeah. So if you airdrop something at zero and you lock in your price at zero and you take dominion and control at zero, and then it becomes wildly appreciative, you're in the same situation as Satoshi. You don't owe any tax until you sell, depending on your jurisdiction, right? Some people never owe tax.
I would just say I talked to a CPA on that one because it sounds like it's got wash sale written all over it. But then again, we don't have to deal with that until December 31st, I don't believe. So that's interesting. It's an interesting argument you're making.
Well, there's other interesting things. Like, for instance, the $27 million that I raised for charity. That's I did great. That by allowing people to sacrifice directly to a 503c registered medical research charity. And then they gave a spreadsheet of, what address caused what donation. And that's 100% tax write-off. And a lot of those people, they might not have, sacrificed just to support free speech. Maybe I found a way. I've raised more money for charities than anyone else in cryptocurrency because I found an intelligent way to do it. And let me tell you what the loophole is. The loophole is that if a charity directly gives you something in exchange for a donation, it is not a write-off. So if you buy a ticket for an event from a charity, it's not a write-off. Well, maybe services might be, but definitely products are not. And so the idea that a third party is the one watching the state of the world and rewarding you for doing something honorable is really unique and something I invented. And as far as the Nobel Prize worthy thing, yeah, it's important, man, because think about it. How much unfair taxation is going on in this world? Think about how much tax you pay. You get taxed on the money that you get. Your employer gets taxed on hiring you. You get taxed on being hired. You both have to forcibly pay extra fees. And then when you go to buy a product, there's tax on the gas that delivered it to you. There's tax at the point of sale. In the United States, you used to be able to buy on the internet without paying local state sales tax. Nope, they got rid of that too. Now you got to pay tax no matter where you buy something from. And they just keep
where do you live,
ramping it up.
Asking?
Secret. I don't tell anybody.
Oh, okay.
Yeah. But I used to live in Florida. I lived in Florida for a long time. If you listen to my live streams, you'll hear European sirens in the background sometimes. So
Puerto Rico.
They've got a great tax structure in Puerto Rico. And if you can move there and pay 0% capital gains tax, I firmly suggest that you do so.
So why is it that,
you're still an American, by the way. Puerto Rico is in America. You get to keep your passport.
This is true. Why is it that you're not listed on Coinbase, Kraken, Binance? You're on the DeFi's, like, obviously Uniswap, you mentioned that yourself.
Sure.
And why is it that CoinMarketCap seems to, have this disparity with you on what your market cap is? They always have you above 200 in terms of ranked coin.
We're always
What's going on? Why do they not like you?
They're a bad company. And we're not the only people they're doing that to. There's lots of coins that they do that to. So back in the old days, you used to be able to use exchange listing as a proxy for quality. And so you wouldn't want to rank things that would scam people. And then you would use the filter of, are they listed on a good exchange, to try and tell where quality is. And I can tell you that Brian Armstrong, the founder of Coinbase, the most highly funded and valuable publicly traded cryptocurrency exchange, has personally said that listing on Coinbase is 100% not a proxy for value. And they will list anything that's legally able to be listed. And they list a lot of trash. So they never updated their worldview, and they still use things like which centralized crap exchange are you on, even though crypto is made to get rid of all those things, to decide whether you get ranked or not. Furthermore, they don't even care to even occasionally we do end up on the front page of CoinMarketCap because they're so not good at their job that they don't gatekeep us properly. And every once in a while, the engine sticks us where we belong on the front page. So if you look at Hex and you say we have 400,000 staking addresses that are unique, and these people pay high fees now in order to become stakers because the fees on Ethereum are high. This is the most real metric by which, actually, there's 400,000 addresses that hold. I think there's maybe 80 or 100,000 staking addresses. I have to check the numbers. You can go to hex.vision and look it up, or staker.app. So what cryptocurrency ranking would we be if you just ranked our community, or how many people have Hex tattoos, or how many people you see in Twitter threads that are Hexicans, or how many millions and millions and hundreds of millions of dollars of market sales has tried to nuke the price, and the buyers have just ate it all up. They don't care. When you go up 1,000,000%, people empty their bags and sell everything. They can't handle gains that are that high, which is why almost no one made the 6.5 million X return of Bitcoin, because they thought they were smart when they sold on a 1X, 10X, 100X, 1,000X, 100,000X, a million X. Guess what? You sold at a million X, you lost out on this next 6.5X. So, people don't realize, and this concept of being illiquid, be the liquidity, set a limit order. It's as liquid as you want it to be. The price will never pass you by. You will get filled before the price goes any higher. And you don't have to pay slippage. You don't have to pay the bid-ask spread. You don't even have to pay gas. You can set limit orders on oneinch.io without paying gas. So, they look at this liquidity that you'd have to use for a market sell, and they think that somehow is equivalent to what the actual liquidity is. The actual liquidity for any market is offline. The vast majority of people that would buy a house don't have open orders for houses. The vast majority of people that would sell a house don't have open sell orders for houses. And it's the same for stocks. It's the same for every asset. And everything's gains on paper. Everything. What if everyone sold all the houses at once? They go to zero. What if everyone sells all the stocks at once? They go to zero. What if everyone sells the gold at once? It goes to zero. Which is why you have to use, this is what I was talking about, the Dunning-Kruger problem. You have to use probabilistic, more advanced thinking. What is the probability that everyone's going to ruin the float and need to sell at once?
Right.
And you can see that it happens. 85% drops in Bitcoin, in Ethereum, in everything. Everything drops 85% except
Right,
stablecoins.
right. I mean, certainly it would take a lot more people wanting to sell if volume were higher to affect a larger price change.
Well,
But
no, it's just those people are richer. It's the same number of people. They're just richer
okay.
people. Did
So
you know that only 42%? Did you know only 2,000 addresses holds 42% of all Bitcoin? It's fact.
I don't know what the exact number is right
I
now,
do.
but I'm going to come back and ask
Search
you
Bitcoin
about
rich list.
centralization as well. We'll pull it up, but we know the Satoshi wallets, they have a lot, and some of them have been activating
About 1
lately.
million
And we've
coins.
had quite a few large activations this year, so that
Yeah.
is something people are looking at. You're not wrong about that. But I want to ask you this here.
I'm
So
not wrong
if
about
if
anything,
I
Kevin.
pull up,
I was told to be humble when I came on the show. I'm like, nah.
you're fine. Don't worry about it. You do you. So this is you on Etherscan. This is the hex token.
Sure.
And if I click on the contract.
Yeah.
Whenever this actually loads, there we go.
Yeah.
Why is there a little button here that says you're blocked by partial or blocked by custodial stablecoin providers like US Tether and USDC?
That's not true. I don't know what that means. Oh, you know what that might mean? So I'll tell you what I think it might mean. ERC20 standard behavior is that if you send coins directly to the contract, you lose them forever and no one can ever retrieve them no matter what, ever. And then people beg USDC and USDT to reverse those transactions on their behalf because they can, because they have admin keys. So I think what that means is that USDC and USDT either won't bail you out or something. I don't know. If you mouse over it, maybe there's a tooltip, but the code works perfectly flawless for years and years and years.
Okay. Yeah. All right. That's interesting. We
everything else around us has failed. We have had 100% uptime in the front end and the contract and the claiming, 100 perfect flawless operation. No one can possibly do better. 100% is as good as it gets.
So speaking of 100%, how much of Hex do you control?
Well, in crypto, you never tell people about your wallets because maybe someone will hit you with a wrench attack and beat your keys out of you. Now, luckily, I don't have my keys in my head, so you can beat me with a wrench as much as you want.
The wrench,
especially if you live in the United States, they do swatting on you. So they call the local police force and say there's a hostage situation at your address and that they can't stay on the phone very long. And then the SWAT team comes and drops a flashbang on your infant through the window and kills your dog and discovers there was nothing really going on. So I don't suggest that anyone in cryptocurrency, or really the internet in general, disclose where they live or how much money they have, even though I've got about $3 million of watches sitting here for flexing purposes. So I think what you're looking for is, I think the price will dump if it's centralized. So can you show me if it's centralized or not, right? So now I'll just tell you about all the centralization I can find because I think that will fulfill your question.
I want to talk about yours, not the other coins.
Well, I can tell you 50% of the supply went to an origin address. Is that enough centralization for you? I can tell you Elon Musk owns 20% of Tesla. Is that enough centralization?
Well,
see, people.
Go ahead. Keep going.
Well, people have these ideas that I have to de-educate them about. So people think that centralization and ownership is bad. Now, I just told you a minute ago that 42% of all Bitcoin is in 2,156 addresses, 2,176 last I checked. Has that been good or bad for price? It's been very good. Why? Because they don't tend to sell. And we see the same thing in Hex. We see whales that have hundreds of millions of dollars of Ethereum, double the price in a single transaction, and then they lock up their coins for 15 years. They don't care about the money. For them, they just want to feel richer. Kind of what I'm doing, right? Like I've been retired for 20 years. What am I actually like? What am I going to do? Buy better stuff? They don't make better stuff. I drive a Ferrari. I've got $3 million of watches sitting here. I got the best speakers, best TV, best blah, blah, blah. What am I really doing with that money? For me, it's glory. I'm in this to win. I want to be the best cryptocurrency founder, and I think I am. And I want to have the best price performance, which I think we already had. And I want to have the best security, the best uptime, the best feature set, total vertical integration. I want the wallet. I want the consensus network. I want the value storage. I want all of it. And we almost have all those parts. We have Hex value storage. We have Pulsechain consensus network. We have Pulsex trading. The only thing I'm missing is fiat on-ramps and wallet. And MetaMask is friendly enough that we don't really need to address that. We really just need the fiat on-ramps. And by the way, Coinbase, or rather CoinMarketCap, is under lawsuit about them misranking and lying about our rank. So you can look that up. It's a public class action lawsuit from California.
And is that filed by you or by your investors?
The Hexagon community. It's a guy named, I think his screen name is Johnny Chaos, but if you look up the action, you can learn his real name.
And what's the status of that lawsuit now? Where do you stand?
Well, they've got served. You know, they waited till the last minute to acknowledge that they were served. And now it's in process.
Okay, so TBD.
Because they're hurting the world. They're putting things on the front page that go to zero and rug pull, like yams, et cetera, et cetera, et cetera. They funnel users into that, and then they don't put them into something that's at 100% security, and it harms the users. It's disgusting. Every coin ranking site and advertisement site makes money on showing you ads, and who pays for those ads? Usually people that are going to victimize you, like eToro.com. eToro.com at the top of their website says 67% of people lose money with us. And they have the biggest marketing budget you've ever seen in your life. They've got their name everywhere. And how do they get it? By victimizing users, by making you increase the volume and pay higher fees, or shilling you coins that are actually terrible ideas. And those are the guys that get a free pass and buy all those ads. And who gets gatekept? The people that aren't victimizing you, the people that everyone wins. There's only 30 days of people, maybe 50 days of people in the entire history of Hex that could have possibly bought a higher price than the price is right now. Period. Everyone's in profit except for a few little guys.
Okay. So what about, how do you respond to, and maybe they're wrong, but I want your opinion on CoinMarketCap. The top 100 hodlers of BTC control about 13.5%, according to CoinMarketCap, right here, 13.55%. If I go to Hex, the top 100 holder accounts control 46%. And then there's also, which just part two to this that I want you to address, both of them at the same time. There's also this talk about 170,000 accounts that were created roughly at the same time as your Origin wallet that were then essentially airdropped 100 to 101 hexes.
I think that there's been multiple airdrops. So I think the first airdrop was someone sent 250,000 addresses, which were the richest addresses on Ethereum, 101 hex, which at the time was like barely anything.
Right.
To try and get around the gatekeeping and the censorship. Okay. So when you're being gatekept by centralized scumbags that profit on victimizing their users, which is every news site and every ranking site selling ads to people that hurt their users, when someone comes around to remove all the volume and get them to lock up their coins so they stop getting victimized and stop making exchanges rich and stop making market makers rich and stop getting rug pulled and exit scammed, when that comes along, it scares them because we're going to lower their profits. They're going to make less money the more people that are on Hex. So what was the question again?
The difference in the top 100 hodlers.
Oh, right. Yeah. So what you do is you've got to get the word out there. And what's one way to get the word out? Give people free money. Like you get coupons in the mail and the newspaper. You give them a little bit of free money. They take a look at what it is. They see if they like it. And then some of them on-ramp and get more. Just like we gave away free Hex to Bitcoiners if they did a free claim. This was somebody just giving away free Hex to try and on-ramp the users. And that happened months and months later. And then it was done again for people that were using the Monarch wallet. We were the first people in the world to use layer 2 ZK Sync, ZK rollup technology to do an airdrop. Vitalik was begging people to use ZK in order to reduce the load on the network. No one would do it. So Hexicans did it. And we were the first airdrop on the first users and still the highest ERC20 balance on the ZK Sync wallet. If you go look at it, maybe they have USDC higher, but under USDC and Ethereum, the highest balance of any coin there, which means adoption. And then if you go in Monarch wallet, you can see the ZK Sync balance. I believe it was also the first mobile wallet in the world to show you your layer 2 balances. We innovated all that. We invented that. But people pretend we're not kicking their butt. We're kicking everyone's butt. We can't win any harder. The only things that could make Hex better are things that have nothing to do with Hex. Fiat on-ramps. That's about it. So like,
yeah, I mean, in fairness, it when you go to DeFi Llama, y'all are sitting at about 17.8 bill of Hex staked. That's roughly as much as Terra Luna has on its own chain. And I think that puts you about 4th in total value locked on the Ethereum blockchain. So it's not bad.
Now let's talk about this locked. Their locks are a lie. Everyone else's locks in cryptocurrency are a lie. If you have money in your wallet, is it locked? No. Okay. But then you deposit somewhere else and can remove it whenever you want. But now it's called locked. It's just in a different wallet of yours. It's not locked at all. But in Hex, when you're locked, you're actually locked. It's another example of everyone else lying and us doing it better. But then somehow magically people point at us and go, "Oh, you're bad." Yeah. And the other thing, I like people that call me a scammer. I've been doing business for 20 years, like retired for 20 years, had a car stereo store, a mortgage company, miracle cleaner, sex toy store. I had everything. Where's all the complaints? Where's the complaints about people that got screwed in anything I've ever done? Anything I've ever done in my entire life, everyone has got a fantastic deal. But I get still called a scammer.
I'll just ask you. I read one thing about some lawsuit about Viagra. I wasn't going to bring it up, but
I was one of the first people in the world to get sued for spam. I have nothing to hide. Okay. I was one of the first people, I guess, except where I live. And there's a lot of people that know, but they're just not on the internet. I was one of the first people in the world to get sued for spam. I was living in the back of my car stereo store warehouse at the age of 19. And I opened my door one day, and there's like a process server there. And she hands me a lawsuit for $500 in Seattle, Washington. I call my lawyer up. My lawyer says, yeah, it's small claims court. You can't have a lawyer represent you. You have to go in person. Oh, I got sued for $500 in small claims court, civil court in Seattle, Washington, and I can't have a lawyer defend me. So it cost me more than $500 to go there and defend myself. So I lose a default judgment for $500. And then people call me the biggest spam king in the world because I just happened to be one of the first people this ever happened to, because Seattle had just, or rather the state of Washington had just created that law. And this was the first guy to go and try and use it. It's hilarious to me. And then it's like, and by the way, since I'm such a spam king, where's all the hex spam, bro? Where's all the hex spam?
I get a lot of donations from your hexies in my... I'm not calling it spam.
That's the opposite of spam. You're making money on it. You're not losing money on it.
And look, I just want to be transparent. I don't own Hexcoin. I'm not paid for this interview, but a lot of people have been asking me for a long time and sending donations in my live streams for me to do this. That's not why I'm doing this. I don't know. Honestly, I replied to somebody's tweet the other day. I'm like, you know what? Let's do it. So, and so far,
we can have this conversation about
responses insightful. I think they merit more, a little more research when I'm done.
We have the most open and transparent stuff on the entire web. Our trading is the most transparent in the world. Our stats are the most superior in the entire world. If you go to hex.vision, you can write your own stats queries because we abstracted all of the parameters of all the stuff you care about. Who referred who? How long are stakes? When are the stakes ending? Show me the chart of future stakes.
I understand.
Who paid fees? It's all in hex.vision.
Yeah. How do you why should somebody invest in Hex versus, let's say, ADA or Solana, another, layer two?
It depends on what meme you want to fall for. Okay. Do you want to fall for the memes that, people are going to buy this because they're going to use it? Like Ethereum Classic. Ethereum Classic has no users. It's worth billions of dollars. It has no users. It's worth billions of dollars. Okay, so what's the meme there? It has high throughput that no one's using? Or do you want to have the truth? The truth that the only thing that the order book cares about, the only thing that the price cares about is buying and holding. Do you want more negative externalities or less? Remember Zcash? Zcash has a building with a bunch of guys working there, burning money, selling the coin down all day, every day. There's no Hex building. There's no Hex overhead. There's no one doing work for your profit. And therefore, no one has to sell the price down. And so it just has less heaviness on it. And because people lock it up, it becomes more and more rare. I mean, right now, the only chart in the world that I know of better than the Hex.com price chart is the share price chart. Because, the Hex price went up 10,000x in 623 days, but the share price went up more. I think it went up 16,000x. So Hex shares are equivalent to Bitcoin miners, except you get them for free when you lock up your Hex, and you don't have to pay for electricity to run them. You don't have to have a facility. You don't have to it's awesome, right? And your Hex shares become more valuable over time because the price only goes up in Hex terms to simulate compounding interest. Whereas if you have a Bitcoin miner, it only goes down in value over time because new technology replaces you. If you're really smart about crypto, or you want to learn more about the differences between Bitcoin and Hex and how they're similar and how they're different, just go to hex.com/tech specs. It's really intelligent. You'll learn some things about the Bitcoin network you never even knew before. I have to de-educate people. People say inflation's bad. Oh yeah, inflation's bad? Explain to me why the best performance that Bitcoin ever had when it was inflating at 100% a year when it first launched. Oh, maybe inflation isn't bad. This is the Dunning-Kruger problem. Inflation does matter, but it doesn't matter as much as the rate at which you can on-ramp new users, and it's easier to multiply your user count when you start with a lower number. And all of these proof-of-work networks inflates like heck, all of them, because they have to pay miners. There used to be no Bitcoin in the world. Now there's 18.5 million Bitcoin. Where'd all the Bitcoin come from? Inflating the heck out of it. And so there's these nuances about the ratio of how many people know about it now to how many people know about it in the future. That's the actual potential for a speculator. There's reflexivity. People buy because the price went higher. They sell because the price went lower. People love buying tops, love selling bottoms, the opposite of what they should do. And so you have to account for reflexivity. You have to account for earlier emissions, which I chart for you in Bitcoin on that website, hex.com/techspecs. And then when was the best time to, so people try and insult Hex because they say it's centralized. Okay. When was the best time to buy Bitcoin? When Satoshi owned 100% of the coins and there was no volume and no liquidity. When was the best time to buy Google? When the owners owned 100% of the coins and there was no inflation and no supply, no volume, and no liquidity.
Okay.
And so people look at
I
opportunity
see
and
that.
think that it's the opposite of opportunity, and it drives me crazy.
I see
Everything
that analogy.
that's successful in this world is centrally owned. Period.
It does a little bit
including the United
conflate
States.
the fact that when Google was created, you were investing at the highest risk point as well, because it could have just as easily gone bankrupt, just like Tesla, even as close as 3 years ago, could have gone bankrupt. But
Hex is only 2 years
let
old.
me ask you this: you say yours is potentially the better meme, so to speak. I don't know if you would reference yourself as a meme, but you say it's easier to hodl because of the staking and the yield parameters, but 85% of the people don't stake.
Sure, you can track that down. Half of those coins are the origin address's daughter coins. So the origin address used to get coins during the launch phase. It would get half the coins. It would have got less if more free claimers claimed, but only 3% of possible Bitcoiners that could have claimed did. Still billions of dollars, but it was only 3%. So, which raised the share that the origin address got. The origin address used to send its coins to other addresses, and those addresses would stake for a very long time, 10-year, 9-year, 8-year, 7-year. The problem with that is that it reduces the market cap because those coins are burnt, and it reduces the APY for other stakers because it's creating tons of shares, and it's hard for other people to create shares. And so at some point, I think maybe a month in, it's all on chain, you can verify it all. Instead of sending to addresses which would go stake for a long time, it would send to addresses that just wouldn't stake. And what that created, if you look at the chain analysis, you don't know who the other addresses are, but you can look at their behavior. The chain analysis is that apparently the largest whales in this ecosystem prefer to let everyone make very high APY and have a higher market cap to on-ramp new users. Now, let me tell you why that might be a good idea. If you own 50% of the coins in something, or you own 50% of the supply in something, like say every single founder of a public traded company used to. So Bezos used to own 50% of Amazon. Musk used to own 50% of Amazon. But then over time, they choose to own less. Why? To on-ramp and make a bigger pie. So they own a smaller piece of a larger pie. They end up making more money. If your game theory is, I just want to own all of the pie, then you can only 2x your stack. You can only 2x your value, period. If you already own half the coins and you work hard to get the other half, you've 2x'd your stack. That's garbage. Hex's price has gone up 1,000,000%, which is 10,000x. So the magic to designing a cryptocurrency in any speculative instrument is the on-ramping of the maximum number of users and making the largest impact, because that matters exponentially more than owning a larger percent of the stuff. Because those coins that aren't staking right now, they could stake, and then the interest rates would go down. But then people would only have the price chart to look at. Now, it would probably amplify the price chart because the people that would be selling would be getting less coins. And so it kind of auto balances like Bitcoin hash rate. If the hash rate's too high compared to the value, miners lose money. They turn the hash rate off. It auto balances. If the staking rate is too high, then people might end their stakes because the payout in Hex terms is lower, but then the USD value would pick up because people are getting paid less coins, right? So it's this auto balancing system.
So I got to understand this. I hear you talking about the past price, which you acknowledge is speculative, which I appreciate that you acknowledge that. But
there's no base demand for any cryptocurrency.
Right.
It's all speculation.
You also mentioned that the original address at one point sent coins to other addresses to stake, and then later sent coins to other addresses to not stake.
Didn't stake. Yes.
This implies that individuals were depositing Hex, and that basically more Hex was being staked and being locked up and potentially paying out other stakers, right? But the question here then becomes,
the more people that stake Hex, the less each staker makes, because they're sharing from a common pool.
It makes sense. The APY goes down. But the question here is, how many of that 13% of the wallets that are staking right now are from that original origin wallet? Because if the original origin wallet,
or it was at one time a maximum of 20%. And then I think that the 1-year stakes ended when 1 year passed. And then just recently, 2-year stakes have ended as well. And so it might be down to maybe 15% of the total shares are in the hands of the origin address. And it would be even less, except the origin address daughters staked for so long that they got a higher multiple. So it took fewer coins to generate 15 or 20% of the shares because the stake lengths were so long. But if you do the chain analysis, the origin address has never sold a single coin ever. So when you see the price dump 65 or 75%, it's normal users doing it, taking profit, buying Lamborghinis and houses and golf courses.
Okay,
There's a
so
lot of very rich people in Hex. A lot.
couple things to clarify here. You first of all, you're saying 15% of the 13%, or of all the shares?
Yes, 15% of the 13%. Yes.
Okay. I will make that clear.
So it gets reduced twice. Yeah.
That makes sense. So now those staking periods, whatever that was, at one point it may have been, it sounds like, as high as 2 or 3%, whatever. Those people have, or wallets have ended their 1 or 2 year stake, you said, or a lot of them have ended their 1 or 2 year stake. Maybe there were even more previously. What happened to the Hex then? Where did the Hex go? Because now those are all individual addresses. You said the origin never sold a single.
That's the reason. Well, that's the reason the staking participation is so low, right? So like, there's a lot of whales in Hex that have really long time horizon thinking. So they'll either stake for 15 years or just get diluted now in order to on-ramp more users, is my guess. Because otherwise, why wouldn't you take the free money? Because you can stake for just a day, right? So I think if a lot of users aren't staking, it's probably because they have like an alternative, maybe marketing method, right? Motive. Because you have to understand, first of all, when you quote somebody that they can make 10,000x returns, it sounds like a scam. So it's easier to actually on-ramp a user saying it's a 40% APY because they can believe that. But if you tell them it's actually 1.4x times your USD return, which is a million X, and you're like, or 10,000x, it's shocking to people. They can barely believe it, you know? And if we showed them all the free money that was airdropped to us, they wouldn't believe that either. It's just, and by the way, here's the sad part. If you do get them to believe that, then it opens them up to start getting scammed by all the scammers out there. And so there's this art that I call the risk diode, where you can warn people about scams without telling them the URL to go to get scammed. And so people that are already being scammed know to be careful or get out. And the people that haven't been introduced to the scam yet, they don't know what to type in order to get introduced to it. And I see people do this wrong all the time.
I appreciate that. I'm gonna go. I want to ask this in a different way. The original wallet sent coins to stake wallets.
It sent coins to other addresses, which then staked.
Right. For 1 to 2 years, and a lot of those.
No, it was an average of 5 years.
Okay.
And then so it was like, if I remember correctly, I haven't done the chain analysis in a while. The daughter addresses would have 10, 9, 8, 7, 6, 5, 4, 3, 2, 1 year long stakes spread out over like every day. So, and then now that 2 years has passed, all those stakes that, it's funny, the community noticed that some of these daughter addresses were about to get penalized by fees because they hadn't ended their stake within 2 weeks. And so this guy named John Wick in Hex Trading Chat, we've got like 10,000 people in this chat that eyeballs every wallet. Oh, this guy's end stake's coming up. Is he going to dump? Is he not going to dump? Oh, this wallet's been buying. Look how much more dry powder he's got. They do all the chain analysis. Like when the price moves, I go to Hex Trading to find out why it moved because those guys already know. So this guy, John Wick in there, he paid $5,000, I think, in gas fees to end a whole bunch of daughter stakes that were going to start being penalized. And here's the reason why I did that. When you have an expired stake, those shares that are in the pool are diluting everybody else's payouts. Now, long term, when someone finally does good accounting or end that stake, it removes those expired shares, which increases everybody else's payouts. And it also deploys the harvested penalties to the stakers as well. And so he just wanted the higher APY now instead of later. And so he caused the good accounting function to be called, which pulled the expired shares, which increased everybody's daily payouts now. At the cost of later, it would have been higher if they kept letting it tick through and burn its stakes. It's totally trustless. Like the community just did everything. It's awesome.
It's a very interesting example of the good accounting function that you talked about. What I want to let me try it this way. So
sure.
If I draw this,
is your intention just to try and point out like, hey, the price could dump to zero because like there's centralization?
No,
like,
you've already made that clear.
Okay.
You've been super transparent that the price could go to zero. I have no ulterior motive. You've been transparent about that, and I respect you for that. What I'm trying to understand.
Interesting fact, you can't actually drive a Uniswap V2 pool to zero by trading. You can only approximate zero, but it could get so close to zero anyway. Yeah.
I appreciate that. Okay. So what I'm trying to understand is this.
Mhm.
Origin wallet here on the left, at some
Yeah.
point sent money to daughter wallets that
Yes.
staked. Let's
Yes.
say these two ended their stake.
Yes.
You said that
Those
the
coins have just
Origin
sat there.
wallet,
They've never moved again.
yeah. So you said this has never sold. What you're now saying is that these right here have
Neither
never
the
moved
Origin
again?
or any of the daughters has ever sold anything on chain that we can see. Now look, those transfers, you don't know what the transfers are, right? It could be anything. It could be the same entity's other wallets. It could have been private sales. It's not known. But what we do know is that none of those coins has ever hit an exchange anywhere ever. None of them.
Okay,
Which
well, hold on.
might be part of the
because
reason the price has gone up 1,000,000%.
Well, hold on. Because you just said that these right here, these
Mhm.
daughter wallets, have never
Yeah.
sold on an exchange, but you don't like
Correct.
exchanges. So wouldn't you sell it on a non-exchange?
Let me ask you this. I've been retired for 20 years. There's rumors that I received 1 million Ethereum during the adoption amplifier launch phase of Hex. There's rumors that I have something to do with these sacrifices, and there's $240 million of stable coins sitting in the Pulsechain sacrifice. The next Pulsex sacrifice is coming up soon in a few days, 1 or 2 days at pulsex.com. And I wouldn't be surprised if 100 or 200 or 300 million came in from that. Now, at some point, why are all these whales in Hex accumulating more instead of dumping it and selling it? Because why would you sell the world's best performing asset when you could buy it? You know the De Beers company? You ever heard about diamonds being worthless?
Diamonds, of course.
Yeah, they're worthless. Go try and buy some of these worthless diamonds. Turns out they're really, really, really expensive. Ask how I know. There's 3,000 stones right here. Double-sided. Yeah. I got this as a gift from a Mexican. I got $3 million of watches there. I know exactly what diamonds cost. Supply and demand is the only thing that matters. And I know personally and have met with billionaires that are accumulating the heck out of Pulse, Hex, and Pulsex. All three. I've met them in person. Real billionaires with more money than you could ever dream. Multiple, like a couple of them. So, those guys have enough money to drive this price as high as they want to drive it. They could, depending at the rate that they want to on-ramp, the price could become really, really silly because we're pre-viral. People talk about Hex and look at things that are wrong and don't realize that those are opportunities. The best time to buy Bitcoin was when it was nowhere, and people were calling it a scam. The best time to buy Hex is when it was nowhere and people are calling it a scam. Because when the gates finally do open, when we have the world's largest airdrop and they look at this chain and they see what's doing the volume and they see that there's tons of Hex volume because it's mostly hexagons, or at least a large part hexagons. Our Pulse chain chat room is nearly twice the size of the Hex chat room, even though Hex has been around for years longer. So for some reason, Pulse chain is an easier pitch for people to digest and they want to on-ramp harder, which is interesting. I think that these are all opportunities. Having no exchange listings is an opportunity. Having no good ranks on large coin market cap sites is an opportunity. Being called a scam by everyone is an opportunity. We did 1 million X on being called a scam. I'm cool with it at this point. Fine. Because you guys that think it's a scam, you can't sell because you never bought. But some of you guys will see the truth, see that it's an amazing opportunity. And all you can do is move the price up. So it's asymmetrically beneficial.
All right. So you mentioned you don't like exchanges. And you prefer...
Well, it's regulatory arbitrage. It's disgusting.
These guys, right? You prefer stuff like 1inch and the DeFi exchanges, the DEXs, right?
100%.
Okay.
Absolutely.
So is it possible that these daughter wallets are selling on DeFi exchanges?
No. It would be on chain. Okay. The coins have never moved. They've never moved.
So nothing that's gone from the Origin wallet has moved out of these daughter wallets?
Never. Nope. So you want to talk about the number one hero, number one stunner, best holder ever? I would say it's those daughter wallets that are getting diluted to cause the market, or those daughter wallets that are getting diluted. And because they're just sitting there, the market cap's higher and the APYs are higher for everybody. Which, by the way,
who controls these?
Nobody knows. Just like Satoshi. Who's Satoshi? Nobody knows.
Okay,
Did he ever dump the price? Nope.
But somebody would have instructed the Origin wallet to send to these daughter wallets. So
how do you know it's even a human? Maybe it's a DAO with voting. Maybe it's a machine. Maybe it's a foundation. Maybe it's an African priest. Who knows?
Wouldn't it be important to know that there was a DAO, if there was a DAO?
The vast majority of projects' trading is done by unknown parties. When you go to an exchange and you buy or sell, you have no idea who you're buying or selling against. In our system, it's more transparent, not less. So is the most transparent. Oh, by the way, I made Uniswap popular myself personally. I'm the reason Uniswap's popular because I am the one that promoted it more than Hayden Adams or anyone on his team. We were Hexicans, the majority of the volume and liquidity on their system for months. DeFi is popular because I made it so. Uniswap's popular because I made it so. And so for me to have the most transparent trading and then have to act like there's some type of shady hiding thing in here is weird to me. There's nobody with more transparent trading than us.
Of the Origin wallet?
I would never tell you that. Never.
Okay. Do you have control of any daughter or son or sibling wallets?
I would never tell you that.
Okay.
By the way, I would suggest that no one ever talk about their crypto balances that they hold. So I also won't tell you about any Bitcoin I may or may not hold. I won't tell you about any Ethereum I may or may not hold. I won't tell you about any stables I may or may not hold. And furthermore, there's this little thing in the United States called securities laws. And quick refresher on them. If you give money to a common pool with the expectation of profit solely from the work of others, and or there is essential managerial or entrepreneurial effort, then you might have a security. And that's a regulated activity. And so in anything that I do, you must have no expectation of profit from the work of others, period. Or you might have a security. And I'm not licensed to be issuing securities. So it's very important that people understand that when they sacrifice, they're doing it to support something that is a political speech issue. And if they happen to get a free token airdrop, congrats. Good for you guys. You got something for free.
Okay.
And the same thing happens with like these questions of what will I do? I will never do anything for you. Nothing. I don't work for you. And the Howey test is very happy about that. You know what everyone else does, by the way, scammers? They promise you the moon and the sun and the stars, the opposite of what I do. And then they run away with your money.
Do you provide any liquidity to these DEXs?
You can do the chain analysis on that. From what I see, the majority of people that provide liquidity kind of have a lot of coins I would never, ever buy in my life. And I've been asking them to move their liquidity off the Ethereum pair to the USDC pair. And they're not doing that either, probably because they like the 2x higher payouts on the APY basis. So there's a ton of liquidity in the system.
Do you provide any liquidity?
I will never tell you about my money, ever. Okay. Never. It's a good question. I mean, I give you props for asking, but I'll never tell you about it.
Tell me a little bit about the Pulsechain and the why Pulsechain? Why not continue with Hex?
Oh, we still are. What do you mean? They amplify each other.
I shouldn't say that to imply that you're stopping Hex, but
no, they amplify each other. So my Hexican community was being murdered by fees by Vitalik, and then Vitalik doubled our fees higher than other people's fees and gave other people better deal than us. Why? Because we do actual business logic. We're actually innovative. And so we need to read and write from disk. And so what he did was he increased the cost of reading and writing to disk by, I think, 15 or 20 fold. And so stupid scam things that don't do business logic and don't need to read and write from disk very much, they got a discount on their transactions. And then people that do have to read and write disk that are doing interesting things, we got penalized. And so it was bad enough that it became sometimes $40 to send a Hex transaction. That's not acceptable. Now I believe it's like 15 or 20, maybe 10. What can I do to save my people? In order to save my people, I need to get these fees down. Okay, how can I get these fees down? You can't. It's a limited resource with a public auction, and there's high demand, period. Okay. So the only way to reduce the price is to increase the supply. So when you go to eat at a McDonald's, if it's full all the time, they'll build another McDonald's. If you go to a gas station, it's full all the time, they'll build another gas station because that's the only way you can serve more people. And so I needed to increase the capacity of a useful blockchain in order to reduce the Ethereum fees for everybody by taking some of the load off of theirs. By the way, there's a lot of coins that don't function on Ethereum anymore because the fees are too high. They'll have a home on the Pulse chain. And even all of the coins that may not like Pulse, we got your ticker, we got your code, the liquidity is going into a separate pool you don't control. So you can't pull it even if you want to. Some people could, like USDC and USDT could just invalidate all the coins. Their users might sue them for doing that, so they might not do that. Okay,
another question.
Sure.
Are you aware of any institutions that own any Hex coin?
I know publicly registered funds that own Hex. I know billionaires that own Hex. I've personally done phone calls with multi-billion dollar funds that want exposure to Pulse primarily right now. They like Pulse more than Hex
okay.
for some reason. The last guys I talked to at Singapore.
What about lending? Is Hex marginable essentially?
No, which is funny because now that means there's no pain in our chart. When you look at the Bitcoin and Ethereum charts, there's a lot of pain of liquidated shorts and a lot of pain of liquidated longs. There's a lot of people that lost a lot of hours of sleep and a lot of fingernails and a lot of relationships by losing money margin trading. And there's none of that in Hex because you'd never be able to long it and short it anywhere. So our chart's the most pain-free chart in the history of crypto. And I think another, go ahead.
Why does your market cap differ from like Coin Market Cap's market cap for Hex?
Well, market cap. So here's another thing that's a huge scam in cryptocurrency that I'm the only person that'll tell you about. It's a good thing we talk because I'm the only guy that'll tell you these things. Everything drops 85%, everything except stables. Ethereum dropped 95 gross. Circulating supply is what's supposed to dictate market cap.
Right.
Everyone includes Satoshi's coins, which have never circulated, never ever moved, ever in the circulating supply, which is multiplied by the price to get the market cap. So market cap just equals supply minus your feels as to how much you think is actually circulating times last traded price. So in Hex, first of all, is it reasonable that Hex's market cap goes down when people perform the best behavior in the system of locking up their coins and burning them? So that if everyone locked up their coins and there was only one left, you'd have an extremely low market cap, but extremely insanely wealthy users? No, doesn't make sense. Is it intelligent that Satoshi's coins, which have never moved, count towards market cap? But in Hex, so like Coin Paprika doesn't include 50% of the supply because they figured the OA had it, even though the OA has moved coins around, even though the OA is staked and unstaked or through, daughter addresses or whatever. So, and I should be clear about that language. The coins that used to be in the OA and were transferred for reasons unknown to parties unknown, staked and unstaked, but the original location where they used to be was in the origin address. Other sites like CoinMarketCap, they never even have updated the supply for years or a year and a half. And so they have a supply left over from way back when, and they just stopped updating it to show that the supply had increased because they're bad at their job. It's very easy to go on Etherscan and look at what the market cap is. You go to etherscan.io, you type Hex, you click it, it literally shows you supply right there. Now, here's another thing that Hex does. When you lock your coins, it burns the coins. But in the contract, there's another thing called allocated supply. And that's the total of all the coins that exist plus all the coins that are locked. And so you could multiply allocated supply times last traded price. You could, it's basically this, the coin ranking sites adjust you by what they feel like adjusting you by, and they'll find some way to manually modify what your circulating supply is to just put you at whatever rank they want.
Okay.
And so for something that says it's a coin market cap ranking site, they're not ranking you by your market cap. It's a lie. According
to you, what is your circulating or the circulating supply of Hex and the total potential supply, also known as the allocated supply, which you described it that way?
I think the total supply is like 660 billion. Okay. I think the 660 billion is just the ERC20 supply that doesn't include the locked. And since about 10% is locked, you'd have to add like roughly another 60 billion. So you're maybe at like 720 billion total. And then it looks like the market participants have different behavior profiles. So it would appear that people that have never staked, you could assume maybe they just continue not to, because what would cause them to change behavior, right? Like we're making guesses based on chain analysis.
Yeah. What do you think is circulating?
I mean, I think the most reliable number for people that you 100% know are retail users are the people that have stakes open. And
but you've got about 17, 18 billion staked. You mentioned you've got 60 billion.
Yeah, but
why is there a difference?
Well, we said that 15% of that was OA daughters, right? So
15% of the 20.
Of the rough, yeah. So I think it's 9.76, but we'll call it 10. Of the 10%, these are great questions, by the way. I wish more people would get into the real math, because this is what the price cares about. It's a real math. Okay. On-chain verifiable real math. So if 10% are staked and 15% of those shares are actually
origin or daughter.
OA daughters,
yeah,
then you could probably remove those from Fermi calculus for circulating. But look, this is a guess, right? They could stake at any point. We don't really know. They could sell at any point. We don't really know, right? No
Because
expectation.
we don't know who they are. They could be
Exactly.
you. They could not be you.
You got it.
Okay.
So, in general, people that have large stakes of things tend to act in the best interest of the things. You don't usually see people murdering their own bags. Like, oh, there's a goose that lays golden eggs. Let's shoot it in the head. It's not that common. So it happens, but it's rather rare. So I would say, what is that? So if you remove, now look, well, let's just remove the 15%. So what's 15% off of 9.76? Like 8%'s left? Yeah. So let's say 8% of 770 billion total is like what, 60 B? So let's say 60 billion times 30 cents. If you want to use the most harsh, like we're removing 90% of the supply here. Like that's a pretty harsh penalty. And I think what you'll end up with actually is what CoinMarketCap has, but let's do the math.
Well, I think more importantly is the amount that is
not 20 billion. I think it's 20 billion cap. Yeah.
So
I think the harshest, remove all the supply you could dream, remove 90% of the supply, you end up with a 20 billion market cap currently. Okay. And by the way, if you want to do that kind of math, if you like low market cap gems, then that math is even better for the price, right? Because now it's 20 instead of hundreds. But that same thing applies to the multiple. If you measure from the day we launched, it's only like a 2000x. If you measure from the bottom, it's a 10,000.
Let's not care about the circulating supply, that 10%. I want to know about that 90% that's allocated but not circulating. Who has that?
Nobody knows. But it's not that many addresses.
But it could be you.
Sure. Could be anybody. Could be you.
Okay.
Yeah.
Okay. Now, maybe we might have an easy explanation for this. CoinGecko has your security audit at 63% as of October 23rd. Why?
What does that mean? I have no idea. Yeah.
I was hoping you
would we actually have multiple audits. So we got a chain security audit that was done, but it's under NDA, so we can't release it. And we got an audit from CoinFabric as well out of Argentina.
Why would an audit be under NDA?
Well, until you finish paying for them. So it works like this. You have to educate the auditor because they're not actually good at their jobs. Now, I hate to say that because I've got to go start looking for some more auditors for some more contracts soon. But in general, they're not actually good at their jobs. And so in order for them to audit your code properly, they have to understand your code. And then it takes your devs time to get them to understand what the code's supposed to do. And then they tell you the things that you could have just copy pasted from Ethereum developer security blog about reentrancy bugs and, saving gas using external instead of internal, or external only instead of public function calls. And you just learn, we already know all this stuff already, right? And so the only thing that the chain security guys found was that someone could have pre-created a collision at great millions of dollars of cost to be able to free claim some extra stuff. And we prevented that with changing the way the Merkle hash was created. And then the CoinFabric guys didn't find anything. Like they just didn't find anything at all.
The Merkle tree is kind of important. Can you go back up on that really quick? What happened with the Merkle tree?
Well, if you want a gas efficient way so for instance, it's very expensive to preemptively just shove stuff at people like a normal airdrop because you incur tons of fees. So right now, if you wanted to send an ERC20 on Ethereum, it's about $10. So it costs you $10 just to send someone an ERC20. It sucks. It's terrible. It's unreliable. And so what you do is instead you create a Merkle root, which creates a Merkle tree. And then people can claim against that tree, proving that they had something that was a member of that set. And so if you proved that you had Bitcoin, then you could claim hex for free from the Merkle tree.
But did you just say there was a problem with the code on that, or I missed that?
No. It was a question of all of these blockchains are predicated on economic viability. Okay. If someone wants to DDoS every single Bitcoin node, they can, and then the network can and will go down. It's just prohibitively expensive. If governments want to make all the SHA-256 hash and force people to hard fork into a different proof of work, they can. It's just economically expensive. So a bug that says someone's willing to lose a ton of money to blow millions of dollars now on a coin that doesn't even have a price or a market yet to cause a free claim by finding collisions in this one hash. Yeah. All we had to do was add bits to the hash. So the solution to this collision attack was just like, oh, we'll make it slightly more expensive for them. We added a little bit of more bits. Yeah.
So there was a little revision that you threw in there. Got it.
Right.
And I mean, really, we're not really expecting collisions.
If you read
significant collisions,
the code
until
is
we have
amazing.
Quantum computing. Yeah. But
the code is amazing. So we do gas efficiency things, like we use bit packing, which is combining multiple values into one storage slot to save money. And then we use bitwise shifts in the storage slot to pull from it more efficiently. We use caching. So we load things into memory, which is cheap, instead of hitting disk, which is expensive. And then we only hit disk if we have to, because the cache said we had to.
Okay.
We have one of the most advanced contracts that you could ever have, with great comments, great flawless function, and you should read it. I mean, it's wonderful. It's wonderful code.
Okay. I should read the code?
Yeah, it's great. It's on. It's online. You go to Etherscan, click contract, and just read it.
Okay, so now I'm confused, because what you're saying is that an auditor whom you haven't finished paying can't understand your code because it's too cryptic. But now you're suggesting I should read your code.
No, it's just because they're bad at their job.
Okay.
No. Look, the number of people in the world that could code is hard, and developers in crypto are usually trash. Real developers look down upon crypto developers. Real developers are better than crypto developers. Real developers have been developing for 40 plus years. Crypto developers haven't. And there's like Solidity, the code that runs Ethereum, it sucks. And Geth, the software that we forked and everyone else forked, and that 90% of all Ethereum nodes use and 100% of all the mining nodes use, it sucks. And in order for it to become better, because it's open source, people have to force it to be better. How many, Ethereum brags about having 20,000 plus developers. Guess what? Those 20,000 developers just add extra load to the five that actually maintain the Geth, which is all the nodes, which is Ethereum. I've got more than 5 devs. So this, like, people don't understand like how hard blockchain is. And so when I tell you that the auditors don't do their job very well, it's that they point out things that aren't bugs, and then we have to explain to them why they're not bugs. Mm-hmm. And then they go, oh, okay. And you have this back and forth process. So instead of pulling my lead dev off of doing actual dev, which is awesome, and then educating the auditors, we just are fine with one public audit, and then the other private audit, it's just private, right? And then we can't finish the contract until we get them to actually fix their audit to be accurate. And we can't get them to fix their audit to be accurate until I take my lead dev off to educate them on everything. And it's just too time consuming.
Okay. So you're saying your auditor is under an NDA, which means they can't reveal any bugs or whatever because they're confused.
No, NDA literally means that we can't brag. We can't publish incomplete audit results that we paid for. Look, the audit was like 60 grand. Why would you
brag about if there are bugs and they're confused? And you also just said that
because we cleared all those.
Are you trying to make
it an issue like I'm screwing over my developer and not paying them or something? They got a new job.
You said it
the
yourself.
Development. So listen, the auditing team got hired by Ernst & Young and didn't really want to be doing auditing anymore. And so I wasn't going to pull my lead developer off of doing real development to go educate the audit team, which, by the way, like, they're actually good. Like I would work with Chain Security again, because in the frame of auditors, they're actually good, but they're not as good as my lead dev. It's just like book writing. When you write a book, the most important person is the author, and you still take it to an editor, and the editor still tries to improve it. But in the end, the author is what matters, not the editor. Okay. You're not going to buy a book because of the editor.
Is the audit that's under NDA right, or is it wrong?
It's right. Like there are no bugs, and they found no bugs, and any bugs that they found, we fixed. But in order for us to publish the audit, we have to make it. These audits are only as useful as they're useful for marketing, because all of the security value we already got. We already fixed everything that they possibly could find, which was one thing, the Merkle root claim. And by the way, the claim function's been over for a year. There is no claim. It's over.
Did
the referral program ended
pay
as well.
For that audit already?
I think it was 60, and I paid maybe 35 or 40 or something like that.
So what's stopping you from paying for the rest of the audit?
I would need to pull my lead dev to write the language as to what they understood in these areas wasn't completely accurate and how this was fixed by this. And then there's back and forth, and then they have to prove it, and then they have to publish it. So like I could do it, but
so you
I'd rather
disagree with some parts or want to add clarity.
Well, no, we all agree that it's secure now, but they don't want to look bad having mentioned things that they said were bugs that aren't. I could go look it up, but then the question is, am I violating my NDA? Like I'm not even sure how much of the content of their stuff I'm allowed to share with you. Like I'd have to go reread the NDA. Like I might be in violation just telling you what I just told you. I'm not sure. So I hope
you made the NDA, right?
No, it's theirs. That's theirs. What do I what do I need an NDA for? It's all public. Like we're going to release the like, there's no reason for me as the guy buying it. The only reason you buy it is to make it public. I would prefer it be public. Why would I want to hide that? If there's a problem with the code, I just go fork the network and make
you would want the audit to be public.
Yes.
So, but what you're saying is you'll make it public after your lead dev provides commentary on it.
If it's important to you, I'll spend the 20 or 30 on it, but I'd have to have another dev do it because my lead dev's working on something better currently. So Pulsex matters more. Pulsechain matters more. We already know the code's perfect because there's hundreds of millions of dollars to be gotten by hacking it. Like of the many things you could worry about, the code is not it. The code is beautiful.
Okay.
It's amazing.
Okay. Yeah. Well, let me put it this way. What else is there that I didn't ask you because I'm out of questions and I'm out of time?
Yeah. We should shill our stuff. My audience is watching. You should tell them about you, and then I should.
No. This isn't about me. It's about you.
All right. Hi, Richard Hart here, a serial entrepreneur, retired self-made millionaire at the age of 25 actually, and created the world's best performing asset, 100% perfect, flawless operation, more secure than Bitcoin, better price performance by like 250x your Bitcoin. Or maybe it was 250x your Ethereum, 750x your Bitcoin. I'd have to look it up. Most open and transparent trading in the world. I'm doing the world's largest airdrop for free. You don't have to do anything for everyone that has any Ethereum coins at all. And you could go use that testnet right now. That's pulsechain.com. And we're also doing another sacrifice phase to support freedom of movement and assembly, which are very important. You know, the difference between being in prison or not is where you get to go. And so if you don't get to go where you want to go, maybe you're a little bit in prison. It's not so nice. So that's coming up at pulsex.com. It's a fork of Uniswap, and it'll have a ton of liquidity at the Pulsechain launch because it's harvesting SushiSwap and Uniswap for most of their PRC20s and putting them into itself. And then I've got free books, t.me/scivive. I wrote a couple free self-help books. I make great price calls. If you want to follow me at twitter.com/RichardHartWin, or youtube.com/RichardHart, you know, I can't give anymore. And we raised $27 million for charity. So free coins, free price calls, free self-help materials, free chat rooms. There's like 65,000 people in the Pulsechain chat room. I can't give away more. I can't do more free stuff or do more good for the world. Like
I will say you've got one heck of an audience,
thanks,
not just audience, but community.
Yeah.
Good job.
I think the important thing for your listeners is it's vital that you guys get crypto right, because financially to you, cryptocurrency is more valuable than anything else you'll ever done in your entire life. If you get this right, you can make 1 million times your money. And that's impossible in any other industry. Impossible. So if you get crypto right, you'll be financially free for life. If you get it wrong, you'll lose everything. You buy a rug pull, it goes to zero, you lose everything. So you get hacked. People get hacked all the time. Fake live stream giveaways. They'll take a copy of this live stream, restream it, and then put a scam border around it. Send 1 coin, get 2 back. And you can't report them enough, and they never go down. It's disgusting.
No, it is disgusting. You are completely right about. Well, I've got to run. I really appreciate your time. Thank you so much.
You asked great questions. You asked every hard-hitting question I think there is. Good job, man.
Well, thank you for answering or doing your best to answer them. Appreciate it.
Man.
And we'll have to do this again sometime. Thanks again.
Sounds good. See you later, bro.
All right, we'll see you. Bye.